Wednesday. What's up, everybody? Wednesday morning, March 17th, the Feast of St. Patrick. Hope everybody's having a great St. Patrick's Day. We are ready to get rolling on a hump day on Wednesday, as we're going to do what we do each and every day here on the Daily Market Commentary. Look at our four major markets and then take a look at our stock of the day. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. If you're a regular viewer, please leave a like. The thumbs up really means a lot. The computers like to know that you're actually watching. And down below in the comment section, tell me a stock that you want me to analyze. Take a look at a stock that you want me to analyze, and it might just be yours as we move forward first, looking at the big picture. So for our big picture today, we're going to start off with the S&P. Now, the S&P is down about 4 points. As we've come off of our all-time high, we broke above that all-time high. Where we did have some areas here. We said, you know, if we break above that level, there's some room to move. And price then used an old area of resistance as a new level of support. But we're kind of just hovering around that area at the moment. So when we're hovering around an all-time high, we had a really nice bounce off of our demand level from our Monday live trade room. And so now that level is still valid. And so when that level is still valid, I need to switch it to a confirmation entry, because there is a chance that price will return back to that area. And so we would look for price to reverse in this level. Now, what about my demand levels until then? Well, you know, looking to the left, I don't have anything super clean. I've got nothing that is really making me jump up and down out of excitement. Even if I go to a 15-minute chart, you know, you may get people who look for this area right in here. So you might have a little bounce off of this, off the 15-minute time frame. So let's keep that area in mind as well. I don't like it as much as I like, if you're going to go with that, the little wick over wick down here on a smaller time frame is probably even a bit better. So I'm going to take the lower one rather than the upper one for a day trade opportunity. So what does that mean? Can I make money on the way down? Well, you can, but understand that when you do that, you're going to be trading against that bigger picture trend. And so if you're trading against that bigger picture trend, and you want to get in, it would have to be on a breakdown. So if we continue to base in front of this area, if we get some good basing in front of this area and you want to try a breakdown, feel free to do so, but your stop at the tightest is above 39.54. At the absolute tightest, your stop would be above the wick of this hourly candle right here. As far as the Nasdaq goes, remember, the Nasdaq was our weaker market. It has not put in a new all-time high. It's actually still down below, but we're sitting right below a key pivotal area on a daily chart. And that key pivotal area is important because if we get above there, then we're going to put in a higher high. We've not on the daily chart as of yet. Now, we did have a supply level here that was hit once. We got a really nice move away. The second time in, we were more than 6 candled out of the position, as it just didn't really, you know, reverse the way you thought that it might. But now our 4-hour trend is definitely, indubitably going to the upside. And so if you want to try a short, just like the S&P, you've got the breakout trade. Now, this one's already broken out from this low that we just described in the S&P. This one's already given you the breakout. So I don't know that I would want to chase that thing and get back after it. If we do make it down to this area here, just like the S&P, there's a nice wick over wick for a small time frame demand reversal. So overall in our markets, though, I will say that there's not a lot of phenomenal opportunities out there today. None of them are jumping up and down at me. Moving over to our crude oil markets and gold. So starting with crude oil, we have a supply level that met entry as price moved down off of that little area of supply. And so our next area of demand was this area right here, which met entry and then got a pretty nice move away. So both supply and demand in this case were pretty effective. Now, this one was a bit of a touch and go off of this demand area. However, the fact that we hit it twice in a row right there, I'm going to remove it. I would normally make it a confirmation, but I'm actually going to remove it at this point. I'm being, you know, we'll call it, what's the new catchphrase? An abundance of caution. I'm having an abundance of caution in that level. And so I still have this one in here as a potential reversal on a supply zone. On our 4-hour, we are, you know, still sideways-ish, and so everything is a little bit more suspect. So I like looking at 15-minute levels because it makes my exposure that much lower in each one. And then the last one would be gold. So in gold, we talked about a potential breakout level above this line. Level still exists. But did we get basing immediately before the level in order to give us a breakout? No. So a lot of people would say, well, that's a false breakout. No, it's not. It's not a false breakout because it's not a breakout. In order to be a false breakout, it has to actually be a breakout. And so I'm still waiting for a breakout above this level. And so all I'm going to do is take this and go, move it here. Because we're still waiting on a potential breakout, but I need basing immediately in front of the level in order to qualify it as a breakout. Now, the demand area here down below, we hit it once, got a nice move away, came to our target, hit it a second time, hit it a third time. I'm not going to say you got in on either one of those because you're probably waiting on a confirmation entry. But what that tells me is that I could have a bit of a breakdown below this area. So we're in a bit of a range-bound zone here. And if you're more aggressive, you can place that breakdown here. I want to be a bit more conservative and kind of move it down to this region. And if that breaks, then I think you've got a clear room to roam down to here. Okay? So all in all, though, there's a lot of fairly sideways price action over the next couple of days that I think could happen. So just be cautious and allow trades to set up. And while we're doing that, we're going to wait for good stock opportunities. So let's talk about our stock of the day. So our stock of the day is PNC Bank. So PNC Financial Services Group is in the banking sector. Financials has been a top performing sector as of late. Really nice, strong move up. Little pullback over the last few days. And I think that pullback that we've had over the last few days could give you a decent entry signal on a couple of financial stocks. You know, when I take a look at companies like Goldman Sachs, I look at companies like Morgan Stanley. I mean, they look almost identical, right? Goldman Sachs, Morgan Stanley, XLF, they all look identical. But when I look at PNC, the thing I like about PNC is that we didn't get the same pullback that the market did. It pulled back, but certainly not to the same degree. Matter of fact, from its high to its low, highest point to that lowest point was a pullback of only 6%, whereas the S&P was significantly greater. If I actually compare this to the, if I put a comparison to the S&P, you'll see that the S&P had a much deeper pullback than PNC Bank did. Now, PNC has not rallied up as much as the S&P has over the last few days, and that's why I think we could be poised for a breakout. So when I look at PNC, let me remove this study here. When I look at PNC, what I like about it is yesterday's candlestick pattern was a really nice reversal pattern. We have rising lows and a really nice doji reversal pattern here that could signal price to move higher. On a gap up today, if we get a gap up this morning, and you know, our pre-market trading is not giving us much of a signal, but if we get a gap up today, I'd be okay with a gap and go trade on this position. If we get basing, you have a breakout above 181, but this could be an island reversal gap where we have that gap down followed by a gap up, and your stop would go below yesterday's low. So keep that one in mind. Note that this does have earnings coming up a month from now, and our implied volatility is in the lower third of its range. Frankly, it's its lowest volatility of the whole year. So you could straight up buy a call if you want to. You're probably still going to get a better reward to risk by doing a bull call spread for those of you that know options. If you don't know options, you should. Come to tradersarmy.com. We'll teach you a little bit about them. So, all right, everybody. Well, that's all I have for today. I hope you guys have a great day. If you need anything, make sure you send us an email, support@tradersarmy.com. Till tomorrow, everybody. I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.